jump straight in. Okay, so like they say, school is a building which has 4 walls and tomorrow inside. So it's a wonderful opportunity to interact with the tomorrows of the world. Thank you so much for having me amongst you today. Yeah. So even before I begin my talk, I want to talk about something that we share in common, all of you students and myself. Can you guess what? Well, those who have been on the chat for some time would already have guessed. What we have in common is the mentorship of Kuriakose sir. Yeah, he was my vice principal in secondary school. And, I remember he would always push us hard, both in co-curriculars as well as the academics. And he was this endless bundle of energy, inspiring us to participate more and more in all the events, school level, inter-school level, etc. Right? So I'm so thankful and indebted for all those opportunities that I had to participate in the multiple events, which to a certain extent, I think has helped shape my personality today. And I'm sure you will all relate with him, having close association with Sir. And I can see that his energy levels have not dipped one bit. And he continues to inspire us, and especially me, I'm inspired to at least catch up with him and manage the same energy levels that he has. Okay. So now coming straight to the talk, what I would do is, as was mentioned in my introduction, I'm a hardcore financial services person, though my field is a little offbeat. Stock exchange is not something that, you will find many people associated with. So I feel that, if you, any career that you choose, you should understand the industry totally, right? So with that context, what I will do is I'll structure my talk in 3 parts. Initially, I'll give you a very brief about the financial services industry, then a little bit detailing about what the stock exchange is all about. And then, of course, we'll talk about the careers that could be there in the stock exchange space. And of course, if there are any questions that you have to ask me, you can follow it up after the talk, and you can put it either in the chat box. I don't know. Joseph will probably compare that as well for us. We'll see how it goes, right? So first, about the financial services industry. So in India, when we talk about financial services industry, it's usually predominantly the banking space. And so much so that it is often equated with the banking space. When you say you are associated with the finance industry, people almost assume that you're working for a bank. But actually, the financial services industry is very, very diversified. It comprises of various sectors, the commercial banks, of course, and the insurance companies, the provident funds, the mutual funds. The new entrants have been the payment banks and the mobile wallet companies. All these all these participants in the industry, have been seeing huge growth in the recent past. Not just the new entrants, but even the existing companies have been growing at a real heavy pace, right? In fact, so much so that India is expected to be the 4th largest private wealth market globally by 2028, which is probably when you all will be stepping deeply into your careers, right? So very good timing. The job market will be huge. The opportunities will be big. So clearly a space to look forward to as you step into the big world, right? Well, I did not mention about stock exchange when I talked about financial services industry a few minutes back. That is because, as I had mentioned earlier, it is rarely talked about. In fact, when I joined the stock exchange, there were families and relationships and friends who in fact told my parents, why do you want your daughter to join a stock exchange? It's a gambling den. So there has been a little negative connotation to stock exchange, which I believe over the years has, kind of dissipated. But if that's something that you hear at your home, well, now is the time to burst all those myths, okay? Let's know about the role of a stock exchange in an economy. This will probably be a good time to introduce you to the stock exchanges. So what is a stock exchange? It is a platform for stocks of public listed companies to trade on. Now, let's understand it in a little more detail, okay? What are public listed companies? So Some of you would have, your parents would be probably entrepreneurs, or you would know people who are entrepreneurs, small-time entrepreneurs, big-time entrepreneurs, which means that they run their own business, right? When you run your own business, so, you may have ambitions to keep it medium size, keep it small, or make it huge, make it a huge, large corporate, probably like the Reliance or the Tatas. If you want to grow to the scale of Reliance, Tatas, and so on and so forth, then, the private wealth, the wealth that you have, or the credit lines that you have access to will not be good enough to take your growth to that level. At that point in time, you need to access the public money. How do you do that? What you do is you offer shares of your company to public. When the shares of a company is offered to the public for the first time, it is called initial public offer, IPO. That word would be familiar to you. Now you know why it is called an initial public offer. It is the very first time that a company is offering its share to public. Now you know why the company wants to float an IPO. They want the money for their growth, right? Why would public, you and me, invest in these companies? Well, clearly, good companies give you good returns, and therefore you and I would invest in it. More or less, moreover, what happens is some of us may not have the entrepreneurial edge, and this is an opportunity for us to make profit without having to invest our time, energy, and money into starting a business, right? But we get to enjoy the benefits of owning a business. Therefore, people like you and me would invest in the returns. Let's understand with a live example. Have you heard of the stock called Infosys? Have you heard of the company called Infosys? Some of you who aspire to be engineers probably also have it as a dream job to join Infosys someday. It used to be, at least some point in time, I don't know about the children of today, but at some point in time in the past, it used to be the dream place for working, right? So let's hear about Infosys. So Infosys was a company which was started by 7 engineers in Pune. This company was started in 1983, if I'm not wrong. Early 1980s, it was started, right? The initial public offer of Infosys was floated sometime in 1993. When the initial IPO was floated, the turnover of the company was around 29 crores, and the profits that the company made was around rupees 8 crores. In about 7 years, that is around 99-2000, the company's turnover increased to 884 crores and the profits increased to 300 crores. So imagine, from 8 crores to 300 crores, right? What made it possible? Having the company listed made that kind of growth possible, because now they had the money, they had the investment in them to go to the next level, to grow to the level that they had the potential to grow. People who invested in the IPO of Infosys have probably made returns of around 1600%. I repeat, 1600%. Compare that to what you get in your FDs and PPFs, which are traditional modes of saving. What do you get? Around 7%, maybe not even that much these days. And it's continually going on reducing, right? So now you have the answer to why you and I invest or should invest in these good companies that are listed on the stock exchange. So if we want to have a quick recap, what is the stock exchange? It is a meeting place for the investors who want to invest in the promising companies and the entrepreneurs who want growth capital to take their business to the next level. So in other words, what the stock exchanges do is help in channelizing the investable surplus into the productive channels. So what if you missed the IPO bus? What if you did not invest in Infosys when the IPO had come, right? You could not have invested any which way. So can you invest now? The answer is yes. The shares of the stock continue to trade on the stock exchange platform. The buyers and sellers trade on the exchange platform in the listed securities. This leads to continually discovering the fair price for the stock. More the buyers, higher the price. It's the demand and supply, right? More the buyers, higher the price, and vice versa. Why would there be more buyers? When the company has a good growth story, everybody would want to buy in it. So a promising company with high growth prospects will have more buyers, and hence the valuation of the company will keep on increasing. The sale of the stock allows firms to grow rapidly by raising funds from the investor. When the stock of a company is bought, it is usually correlated with the rise in the value of the company and suggests growth in economic activities. You know, what happens is every time there is a good news in the company, it kind of gets incorporated into the price of the company. So if there is a big order that the company has won, it will reflect in the price that it is getting traded on the exchange. Similarly, if there is a bad news, maybe the pandemic was a bad news for some of the companies, so that would also get reflect as negative growth, rather fall in price on the exchange platform. So it's a ever evolving kind of a thing for the company as well as for the investors. So what is the stock exchange doing here? It is enabling rapid capital formation. See, it leads to a virtuous cycle. How does it lead to a virtuous cycle? You invest, you get good returns, so you invest more, and so on and so forth. The cycle continues. And what is happening is that this is leading to a continuous capital formation, which in turn enhances the economic development of the country. I worked for the National Stock Exchange for about 16 years, and it very aptly puts this in its tagline when it says that the Indian economy passes through here. So this is what an equity exchange is. And we also have multiple asset classes. It's not just equities that get traded. So there are equity derivatives, there are commodity derivatives, there are currency derivatives, there are interest rate derivatives. All of these get traded on the exchange platform. Currently, I'm working with the leading agri-commodity derivative exchange. So you may have a question as to, we understand now what the equity is doing, but why do you need a commodity stock exchange? So if you talk about the agri-commodity stock exchange, it helps in two important economic functions, that of price discovery and risk management of the commodities. Now, in a predominantly agrarian economy like ours, where about 60% of the people are getting their livelihood from directly or indirectly from agri-related occupations, agri-commodity exchanges are playing a very important role. So let me give you a quick example to make you appreciate what and how a commodity exchange is important in our context, right? So let's take McDonald's. Okay, so you all go to McDonald's, right? And whenever you go to McDonald's, I think potato fries, what do you call that? Yeah, so fries are a must, right? See, the price of the fries is pretty much constant throughout the year, right? But the potatoes, which is the key ingredient for making the fries, the potatoes are not priced the same throughout the year. Why? Because it is produced or harvested at a particular, it is seasonal, right? So it is harvested at a particular point. When it is harvested, again, the supply is more and the prices will be less. And when it is not the harvest season for potatoes, its price will be more. However, McDonald's has to keep its price constantly at the same level, right? Which means that with the increase and decrease in price of the potato, their profits will fluctuate. That is a risk for McDonald's, right? So what could McDonald's do? They could trade in a derivative form, in a derivative exchange. What is a derivative? Derivative, as the name suggests, derives its value from the underlying asset. So what happens in derivatives is you have these future contracts. What do you mean by future contracts? You enter into a contract today to buy or sell a product at a future date. So what would MACD do? It could buy a potato contract on an exchange for the period when the harvest season is not there. And what would happen with that? It will lock the price at which the potatoes can be procured, which means then it will have more control over its balance sheet. It will have a better idea of what impact it is going to have on profit and loss, and therefore better decision making and MIS for MACDs. Now, MACD is the buyer, right? Who is the seller? The seller is the farmer. What is the benefit to the farmer? The farmer has exactly the same benefit. See, look at it from the farmer's perspective. When he is sowing the crop of potato, he has no clue what prices he is going to reap at the time of harvest, right? So if the harvest is a bumper crop, then, you know, the prices go down because the supply is increased. If there are some infestations to the crop, then the crop is reduced. So while the prices will be high, he has to bear the loss of the infested crop, right? So he is constantly facing a price risk. So if he is selling the futures contract of potato on the stock exchange, what has he done? He has locked a price for his harvest at a future date. So if the prices of the potato today are, you know, around 23 rupees kg or something, so he'll say that I will sell the potato on, today is what, September 25th, October, November, December 25th to MACD at you know, whatever price, say 24 rupees. I'll sell it to MACD at 24 rupees. So MACD knows that it is going to get at 24 rupees. Farmer knows that he's going to get 24 rupees per kg for the potato that he is growing, right? So it's a win-win for both of them. It, in that sense, is a tool for financial inclusion in the Indian economy. So this is a very, very hypothetical example. And just to give you a brief idea of what this trading is all about, right? How it helps. If you want, I can quickly give you another example. Again, very hypothetical, just to ensure that you understand why a commodity exchange is required. I don't know if you like lychees. You know, do you like lychees? So I'm sure Kerala doesn't produce any lychees. Bihar is the state which produces lychees, right? And the Shahi lychees of Bihar are looked forward to by most of us because they are the best. But what happens is there is always a bumper crop of Shahi lychee in Bihar, and therefore at times you will be surprised to know that the farmer has to destroy the crop, you know, because the cost of bringing it to the market is not worth selling at the price that he is going to get there. That's the kind of demand supply anomaly that is there. But if that farmer, again, very hypothetical, the nuances are a little different, and I do not really want to get into the technicalities with you at this juncture. Just an understanding of the subject is what you need to get. So suppose these farmers were able to kind of know about the fact that the price that you and I are willing to pay, or any of the states that do not grow lychee are willing to pay, what would have happened? They would have got a better price for the lychees. So you have to have a platform, you have to have transparency of quotes. You and I, or rather the wholesalers in your state and my state, would, if they were able to quote the price that they are willing to buy lychee at, then the farmers would have probably diverted their lychees here than destroying their crops. So clearly, there is a value that the stock exchanges add in terms of price discovery and risk management. So the stock exchanges make the price discovery process transparent, fair, and efficient, right? I hope you get a basic understanding of what the commodity derivatives is all about. So then now is a good time to talk about what are the career options in stock exchange. If you really wanted to be a part of an industry which is, you know, known as the barometer of the economy, then what would you need to do, right? So here's the good news. Pretty much any profession or many professions are assimilated in the stock exchange space. Let me explain. So the trading and the settlement mechanism that the stock exchanges follow requires state-of-art technology to be adopted, right? Which means that, you know, we need the software guys, the hardware guys, and the infrastructure guys. So engineers, welcome to the stock exchange space. Then we have a surveillance team. What does the surveillance team do? The surveillance team is looking at the trading activity and looking out for bad guys if anybody is manipulating the markets, etc. Which means they need to do a lot of data crunching. So if data is what excites you, statistics is what excites you, then we have place for data analysts big time in the stock exchange space. Then we have a risk management team. What is the risk management team doing? It is ensuring that the stock exchange is not put to any risk. The stock exchange stands as a counterparty to any trade that happens on the stock exchange platform, which means that if you're buying or selling on the stock exchange platform. So just stepping back a little bit to the stock exchange space, when we talked about Infosys, that you could buy it on the stock exchange platform, maybe one question that you had in your mind is, why can't I buy it from a friend who owns Infosys? Why do I need to do it on the stock exchange platform? Well, the answer is that your friend, so he has the shares and you have the money. So yes, you could have given him the money and he could have given you the shares. If all goes well, then everything is fine. But suppose your friend, and let's not call him a friend, suppose this person does not deliver the Infosys shares to you, what recourse do you have? You have zero recourse, right? But if you do it on the stock exchange platform, then the stock exchange stands as a guarantee to that contract, which means that if that person did not deliver, the stock exchange will get additional shares and get it issued to you and deal with that person in its own way at a later. You don't have to bother about somebody who has not delivered the shares or not given the money. The stock exchange is the counterparty to every deal that you are doing, which means that we need to manage the risk that we are being faced with. And for that, we need risk professionals. So if risk is your calling, again, you're welcome to the stock exchange space. Then we have a huge demand for the chartered accountants, because we do inspection of the member brokers of the stock exchange industry, and we have a huge amount of dealing with the books of accounts. So chartered accountants are welcome. Then whenever there is a non-compliance by the brokers, we have to take enforcement actions. So we need the legal guys. So if law is what you want to take, again, you could be a part of the stock exchange industry. And MBAs, well, we have many roles for MBAs, for the membership that we do, for the investor services that we do. In fact, in my exchange, we also take graduates and postgraduate from agriculture universities, because they are the ones who design the products for us, and they're the ones who play a major role in business development of the commodity exchanges. So you can see it's varied roles that are there. And it's not just the stock exchange per se that we are talking about. There are many peripheral roles that you could become a part of. You could become a stockbroker. You could become a trader, the guy who actually puts deals on the exchange platform. You could become a financial advisor. You could become an investment advisor. You could become a research analyst. You could become a fundamental research person, which means you look at the fundamentals of the company and decide and predict the price that the company can command. There's also a technical research wing, which looks at the patterns of trading of a stock and predicts the next move of the stock. So you could become, market researcher. You could become a distributor. So there are multiple peripheral roles surrounding the stock exchange space. So are you excited to join the barometer of the economy? The place where, we are channelizing all the investable surplus into the productive channel, ensuring the national development. Does that excite you? Well, even if it doesn't, one word of advice to you all is that ensure that, whatever your savings are, when you start earning, remember to channelize it into productive channels. Remember to become a part of the prosperity of the nation by investing in growing companies, right? Beware that this is the only way to beat inflation. Your FDs and PPFs will give you negative returns thanks to the decreasing value of money. Some of you who are doing economics will understand what I'm saying, right? So the stock market offers you the ability to raise the profits without the cost of entering into your own business. Yeah. So make use of this opportunity. Yeah. And to close, I just want to tell you all, and probably you will never realize this, but your generation is truly, truly privileged, right? You all are much more informed and aware than my generation ever was. You are all better equipped to take on the world. I'll take my example. Okay. I did my MBA in marketing and I got offered a marketing job in finance industry. And then an opportunity came up in pure finance stream. And then there was no looking back. I have now worked in the stock exchange space for about 2 decades, like was informed to you in my introduction. I have worked with the leading stock exchange of the country, the National Stock Exchange. I have worked with the leading agri commodity exchange. I'm working with the leading agri commodity exchange, the NCDEX. I'm very passionate about this space, and it is very exciting to be a part of this industry. There's never a slow day in the stock exchange, right? But the point that I'm trying to make is that the industry chose me and I didn't choose the industry. It was serendipity that I ended up in the stock exchange space, and I'm probably very lucky that I enjoy it. Okay. So, but for you all, it's totally different. You all are wired different. You know what you want in life, and you know what gets your heart racing and what you want to pursue. So for you all, the world is, a big or rather a small global world wherein you can go for any profession that you want. And the only thing that I would like to tell you is, make most of today's time, study hard, participate in co-curricular activities with full gusto, build additional skill sets. Very important that you keep adding to your skill sets. There are enough online courses. Most of them are free. Enjoy every moment of your school and college life. Most importantly, find out what you like doing best and get someone to pay you for doing it. All the best to each one of you. Thank you very much again for this opportunity to connect with you all. I'll be very happy to take any questions that you have.
I have a question.
Please, Manas.
So what can the students expect when joining this career?
A lot of hard work.
What can they expect?
So like I said, it's a very exciting place to be in. However, it also means the pressures of business in a stock exchange is very different from your work pressures at other places. So the day ends for finality. There's nothing that you can procrastinate in a stock exchange space, because what happens is all the trades that have taken place on a particular day have to be cleared, have to be completed on that day itself. So whatever role you are connected with, you cannot leave anything pending on your desk and come back tomorrow to complete it. So that's one thing that is very different about the stock exchange space. A lot of hard work is definitely going to be there. But like I mentioned to you about the multiple roles that are offered. And I think, and I'm very pretty sure that, probably this is the only industry wherein you have an opportunity to do, a membership activity, investor protection activity, a PML, which is prevention of money laundering activity. So if you stay on for long, like, I have spent about 2 decades, and I honestly can't say that, I have seen it all in the stock exchange space. That's the kind of learning that is available in this industry. So that's what keeps me excited about it. It will never become, mundane, boring. Every day is different in a stock exchange. Any peripheral role also that you take. Did that answer your question?
Yes, thank you, ma'am.
Ma'am, I have a question.
Yes.
Yeah. Ma'am, in stock exchange, is it reliable? If not, are there any risk factors in it?
Matlab job wise, investment wise.
Ma'am, investment wise.
So there's risk in everything, right? You know of
Yes.
banks which have gone bust, right? So it's all about doing your homework before you start investing. See, never invest on tips. You know, there are, of course, like I talked about surveillance, right? There are always these people who will try to manipulate stocks, etc. Do your homework. Always look up the company that you are going to invest in. I gave you an example of Infosys, which is a good story, right? There are multiple bad stories also. But what happens is if people kind of become greedy and invest in companies which do not have fundamentals, you know, which do not have strong fundamentals. So that is something to avoid. Do your own research, understand. And if you think that, you know, you are not in a position to do the kind of research that is required, then what you should do is invest in mutual funds, because then your money is handled by experts who understand the markets, right? So it's not a necessity that you need to directly invest in the markets. You can always do it through mutual funds. That's in fact a very good way of doing it.
Okay, ma'am. And you have also mentioned about a future contract.
Yeah.
Right. So I was thinking, are there certain drawbacks to these future contracts? Like in McD's case or in the farmer's case, is there any drawbacks, or does the company or the farmer, do they face any losses?
In fact, it's the other way around. So if, and you know, I told you that that's not exactly the way that, you know, trade takes place. And that was only for the example purpose. But if the farmer is not taking this kind of contract, so I hope we have time. I'll again explain it through an example. So you see, you should understand the alternative that the farmer has to make a sense of whether this is useful for the farmer or not. So what is the alternative? Let's understand how the marketing happens in the agri space. Okay, so all the states have these agriculture produce marketing committees, which are APMCs, in which the farmers are supposed to come and sell their produce. Okay, let's take the example of we talked about potatoes. No, let's continue with potatoes. Okay, so in Maharashtra, Vashi APMC is where the farmers bring the produce of potato to sell, right? So when if you look up the Vashi Mandi price, you'll probably find it at rupees 8 per kg. So the farmer is getting rupees 8 per kg at the Vashi Mandi. Okay, and today morning when I bought potatoes, I paid 25 rupees kg, right? So that's around what? So the mandi is where the wholesalers buy. The wholesalers will sell it to the retailers, and you and I will buy it from the retailers. So in this three link, there is around 200% change. Is that what you get in business? In no business do you get that kind of margins, right? So what is happening is that the farmer is definitely not the beneficiary here. The middlemen are becoming the beneficiary. Suppose the farmer was to take a future contract, then the entire benefit of the price would probably go to the farmer. Again, the same thing, you know, it is a very hypothetical kind of, and there are more nuances involved in the trading, but this is a basic, for a basic understanding, I think this example would suffice. So
you're basically saying that the future contracts act as an advantage in the stock exchange market?
Not just stock exchange market, it has an advantage in the economy. That's why I said that these markets are a tool for financial inclusion. What is financial inclusion? You ensure that the benefits of the growth in the economy go to the very last person in the hierarchy, right? So if the farmer is that person, then you are ensuring that the benefits are going to the farmer. So that's the role of a stock exchange in any country, and it becomes even more underlined in our case because, you know, we are this agrarian economy. In fact, I'm not too sure how many of you are aware, but we are the biggest producers. India is the biggest producer, biggest consumer, and also biggest exporter and importer in kind of, it follows from that, the fact that we are biggest consumers and producers. We are exporters and importers. So agri-commodity exchanges in India need to be really having an underlined importance because of the kind of presence we have in agri space.
Okay, ma'am. And then like how you have explained about stock exchange. So with this knowledge, I'm actually pursuing the science field, but then
Okay.
I feel like the stock exchange, I've always been interested with the topic of stock exchange. So regarding this knowledge, how can it help me in my science field?
So, like I said, see, I mean, there are many science people in my who I work with, right? So,
Okay.
I don't know what you want to do. When you're saying science, of course, science can be very broad,
Yes, ma'am.
right?
It's very true.
You can take up any profession at all. So suppose you take a profession which I lined up and you want to join the stock exchange space. That's of course an option that is available to you. But if your interest in stock exchange is not from a career perspective, but from like I heard you from an investment perspective, then what I would suggest is that, see, money is something, and unfortunately our education system probably needs to gear up to that. Money is something that all of us will need to deal with, whether we are science students, or commerce students or art students. But that is something that is not taught to us as a subject, right? So whichever profession you end up with, you will have to learn to deal with money, and that is where probably the stock exchange will be very closely connected to.
Okay, ma'am.
So I would
And that's
suggest
all.
you should know how to read a balance sheet, So maybe that's a basic minimum. Just to understand a company is good, bad, ugly, you need to have very basic knowledge of balance sheets. And there are umpteen courses completely free available online for you to do that. And you know what?
Okay.
Learn as much as you can when you are young, because then life becomes very busy as you
Okay.
step into the careers, right?
Yes, ma'am. Okay, ma'am. That's all. Thank you.
Ma'am, I have a question. My name is Samuel.
Yeah, Samuel, tell me.
So, which are the shares that are always safe for trading?
No, that is a question I'm not allowed to answer. Okay. So that is an individual choice. It depends upon your risk appetite, right? So clearly, again, taking off my professional hat, the safest bets are to trade in mutual funds if you are not very well versed with with appreciating with the company, good, bad, ugly, reading the balance sheets of the company, making judgments about a company based on the data that is there. So if that's not happening, then mutual funds is the safest form. But do you know what a Nifty or a Sensex is? These are indices. It's called an index. It's kind of a representative of the entire market. So usually the biggest of the big companies, the ones which are showing a huge promise and growth, are the ones that become a part of the index. So index stocks are always safest to trade in. But why I mentioned the risk appetite part is, so if see somebody else also asked me about the risk in investment, right? So if you buy a small company, it will. Giving you an example again, if I buy a 10 rupees stock and if it increases to 12 rupees, the percentage growth is much higher as compared to if I buy a stock, and all the Nifty stocks will be of much higher value because these companies are big, right? So if I buy a stock which is of 1,000 rupees and it goes up by 2 rupees, of course, the percentage is much lower. So that's the kind of difference that you need to understand. So what is the kind of risk appetite you have? Usually people who start very young, have a very high risk-taking capacity. And as you reach my age, your risk-taking capacity reduces because you know that you have only these many more years to earn, and your responsibilities are much higher, etc. Right? And when my father's age, now he doesn't invest, but I'm just telling you, he keeps telling us that his responsibilities are done and he is, going to use his money the way he wants. So again, his risk appetite is very high, can be very high, though it's very wrong. It can't be high as you grow older because your earning capacity or your productive years, your years that you will continue to earn become less. Your risk appetite reduces and you try to look for safer modes of investment. but this is not a personal advice. Okay, this is just a general observation. My risk
Okay, ma'am.
appetite is very low, and also people who work in the stock exchange are not allowed to invest in any security. And of course, we are not allowed to talk about which are good securities to buy, which are bad securities to buy. We are not allowed to talk about it.
Okay, ma'am. Thank you, ma'am.
Good evening, ma'am. Once again, welcome to Rajas International School. I'm Sarah Sobel Matthew in grade 8. Ma'am, I understand there are a lot of opportunities. However, are there internship programs because experience matters in any organization?
Yeah, there are internship programs, and we take people as young as second year. When you are doing your business administration and all, even in the second year, they look for internships. So we do a lot of internship programs, and what we do is we give specific projects to the students. And let me tell you, my experience has been so wonderful. They always bring a very out of the box perspective to or whatever is given to them. So yes, we do a lot of internships. So whenever you join a college or whatever, and if I'm not retired, please do get in touch. We'll see what we can do about internships for your college.
Thank you, ma'am.
Thank you.
Hello, ma'am. My name is Esther.
Hi,
I have a question. What is the risk when involved? What is the risk involved when investing in companies on the stock exchange?
So see, what is happening is you're becoming a owner, right? When you buy a share of a company, you are a part owner of that company. So owning any business will have its risk. So things could go right, things could go wrong. But like I gave you the example of Infosys, everything went right for the company. There was a patch, and probably it's kind of going through that a little rough patch even now. When Infosys shares did take a dip, there were issues in the company, etc., in the management of the company, etc., etc. So it's a cycle. So it's important that you once you invest in a company, you keep tracking it, right? And when you feel that the company is not doing well, then you exit from the company. That's what the stock exchanges provide. It's called liquidity, your ability to exit from the company as and when you want, which means there should be a buyer for that stock at any point in time. So when you buy highly liquid stocks, you are always able to exit from the stock. So the answer is the risks are always there. However, can they be managed? Yes, they can be managed. What is important? You should learn to appreciate the company, reading the company. You should learn that. You should build those skills. And two, if you do not have the inclination to do that, again, maybe go through an expert who will help you do that. Mutual fund is the best way to kind of do it. And if you earn loads and loads of money, maybe you can go to a PMS guy. PMS is portfolio management service. So high net worth individuals, hand over their money to these PMS guys who manage their money for them and, ensure or rather try to get a very good return, healthy return for these high net worth individuals.
Yeah. And my second question is, how does selling shares on the stock exchange benefit the investor?
So if I buy the stock at 10 rupees and I sell it at 20 rupees, one, I make that, 10 rupees, which is 100% increase. I talked about Infosys. People who are invested in the IPO of Infosys would have gained around 1600% of the on their investments. One is that, and second, you earn dividends on your shares. So because you are the owner of the company, you get a part of the dividends that the companies distribute. So do you understand dividends? I am not too sure which line you have taken.
Yeah, I'm in grade 7, so.
Oh, so you're very young. So you understand that when we invest in FDs, we get interest, right?
Yeah.
So similarly, when we buy shares of a company, we get dividends. It's a part in the profit of the company. Because you become a part owner, you get some part of the profits. That is called dividend. So your gains in an investment on a security are two types. One is, of course, you gain in the price of the security, and two, you regularly earn dividends from the company. Does that answer your question?
Yeah, ma'am. Thank you.
When I'm your age, I had no clue of what stock exchange was also. So I'm so glad you're asking me this question.
Yeah, ma'am. Thank you, ma'am, so much.
Thank you, Esther.
Yes, ma'am, I have a question.
Yes, Angela.
My name is Angela from grade 8A. Is stock exchange a good career?
Well, if you ask me, it's a wonderful place to be in. Like I said, it depends on what kind of pace you like, right? So it's a lot of hard work, and like I said, sometimes you have to put in late hours because there's no keeping the work for tomorrow, right? So if you're okay with these two kind of things, then I think you should like it. It may differ from person to person. For me, it became the right calling, So as you grow up, you're very young right now. So as you grow up, you will know what your interests are. And if you like numbers, if you like following up, tracking companies, etc., then probably it's going to be good calling for you too. It always depends from person to person. So just keep your mind open and keep reading about it. See if it excites you, then that's what you need to do. Like I said, find out a job that you love, and so that you can get someone to pay you for doing it. And another thing is, if you do something that you are enjoying doing, then you'll never have to work in your life, if what I'm trying to say. So ensure that you choose the right profession. And of course, there are many days in every profession. Okay, there are times when I'm like a little down because of whatever has happened. So that happens in every profession, but you have to take it in your stride.
Yes, ma'am. And my second question is, what are the advantages of stock exchange if you pick it?
Stock exchange? Sorry, what are
yes,
the
ma'am.
I didn't get you.
What are the advantages of stock exchange, ma'am? If you want to choose the stock exchange, ma'am, what are the advantages that of picking the stock exchange?
As a career?
Yes, ma'am.
So same thing, because there is never-ending learning in a stock exchange industry. There are so many different fields under one roof, and you can keep getting yourself rotated from one. I talked about risk, surveillance, clearing, trading, membership. So there are so many roles that can be played. Even in 2 decades, I have now completed around 24 years in stock exchange industry, and I still can't say that I know it all. So that kind of thing, keeps me going. So if that's what you like, continuously learning new things, etc., then that's a big advantage, and it pays well. So you make money.
Thank you, ma'am.
Yeah.
Ma'am, I have a question.
Yeah.
Ma'am, how do you know which company is right to invest on?
So you are asking me a wrong question. I'm not allowed to answer this, but broadly, any company that is on a growth path, that is in a growing space. So you look at the industry and you look at the company. Okay. So what gives you a good idea is that in the industry, where is this company standing, right? So if you choose a company which is not very much at the top, but has a potential to go up to the top, then you know that there are growth prospects for that company. You then invest in companies like, you could invest in companies like those. If you invest in the companies at top, you may probably lose your money, but the only thing is further growth will probably be less. So what you earn when you invest in companies which are at the top end of the industry is the dividends. So again, depending upon risk appetite, you will make those kind of decisions. But you should look for companies which have strong fundamentals and good growth prospects. The industry should have a growth prospect. In the beginning, I talked about how the private wealth industry in India is growing, which means this industry has huge growth prospects. So you have to choose an industry which has high growth prospects, and you have to choose a company which is growing rapidly in that space. So broadly, those could be two guidelines, right?
Thank you, ma'am.
Welcome.
Good evening, ma'am. I'm Anush from Stanley.
My God, which standard are you from, Anna?
Yeah, ma'am.
Which standard?
7A.
Oh, tell me.
What is demand account and how to use terminal for trading?
Sorry, what is?
What is demand account and how to use terminal for trading?
What is demat account? I understood. What is the second line, please?
And how to use terminal trading?
How to use?
Terminal trading.
Terminal trading, is it?
Yeah, ma'am.
Okay. My God, I'm really impressed with the question. So I did not mention demat accounts because I thought it will become a little technical. I'm very glad that this question has been asked. So when we talked about, let me go back to the Infosys example that I gave you all. So if you were to buy Infosys share and I was to sell you Infosys share, what would you expect? That, you know, a physical share certificate will be given to you. So that was the case about, say, 25 years back, when all the shares were actually physically transacted, right? But after that, these shares have been dematerialized, which means they have been made into, the physicality of the shares has been removed. So that is what is called dematerialized shares. Now what happens is, like in your when you transfer money from your account to my account, what you really get is a debit entry and a credit entry, which means some amount of money will be deducted from your account, and some amount of money will, say, the same amount of money will get credited to my account, right? So there is a minus and a plus happening. When you do demat trading, so you right now there is no physical trading allowed, which means physical certificates are not given and taken from the buyer and the seller. Therefore, each buyer and seller needs to have what is called a demat account. Like you need to have a bank account for doing a transaction that we talked about, you need to have a demat account for trading, which means if I was buying 100 shares of Infosys, then in my demat account, it will reflect as plus 100 Infosys. Okay, I'm not getting physical shares, but I'm getting an entry in my demat account. Similarly, whoever has sold me these shares will not be giving me physical certificate, but will get a debit entry, which means he will get a deduction of 100 shares from his account. So it's basically become a completely non-physical transaction. What is a trading account? So can you and I trade directly on NSE? We know the answer is, as of date, the answer is no. We need to go to a broker. So who is a broker? A broker becomes, broker takes a membership of the exchange, which means that the exchange is allowing him to trade on its platform. The broker can trade on his own behalf, or he can also trade on behalf of the clients. So what you and I do is we become clients of a broker and we open a trading account with the broker. So if I have to buy these Infosys shares, then I go to the broker and in my trading account, I put an order that I want to buy 100 shares of Infosys. When the trade takes place, my demat account gets a credit of these 100 shares. I've tried to keep it as simple as possible. I'm not too sure if you have understood. Do you want me to take you through it again, or have you understood?
Yeah. My second question is, who is responsible for his losses and ignorance?
Who is responsible for?
His losses and ignorance.
Losses, is it?
Yeah, ma'am.
Who is responsible for losses, as it? When I'm trading, if I made loss, who is responsible? Is that the question you are asking?
No, ma'am. Yeah, ma'am. Who is responsible for his losses and ignorance?
Losses, I understood. I didn't understand after that.
Ignorance.
Ignorance.
Yeah.
Well, each one of us is responsible for the losses or the profits that we make and for the ignorance that we have. So Nobody else will take, onus for your losses or for the ignorance of the markets that you have. Each one of us is individually responsible for that.
Okay, ma'am. Thank you.
Welcome, dear.
Good evening, ma'am.
Hi, Bianca. George.
I'm George Anthony.
Okay, hi, George.
Madam, there is a question from my side. It's a sensitive question because online platforms, different online platforms are available to do stock trading, currency trading, and commodity trading.
Yeah.
Is it legally allowed in India, and any platforms legally allowed?
If you're
Because
trading,
so many cheating happening in this area.
so many cheating.
Cheating.
So the online platforms that you are talking about, if they are
online trading.
Online trading, yeah, online trading that you are
online
talking.
trading platform.
Yeah. So let me again give you an example. So if you go back to the days when the national stock exchange concept was not there, and you wanted to buy, say, 100 shares of Reliance, then from Kerala you would find a broker who would again find a broker in Bombay who would go and put an order in the Bombay Stock Exchange, in the ring of the Bombay Stock Exchange, and he would then the same reverse cycle would happen for the shares to come back to you. In all this transaction, what information that was available to you was the open, high, low, and close price. So which means that if you usually bought, then you will mostly, the broker will tell you that it is around the high price, and if you have sold, he will most likely to tell you that's around the low price. There was zero transparency in those days. After electronic trading started, after exchanges like NSE came into being, then the trading became completely electronic, which means that you and I can place an order on the broking platform through an online mode. Today, if I take my phone, I can put an order, right? So all this is completely legal as long as it is going on the exchange platform. But there is another thing that you all need to be aware of, which is called dabba trading, which means that people kind of use the transaction charges, or rather the trade prices that are trading on the exchange platform, and create their own space and do their own trading, which it is not done on the platform of the exchange. So why do people go to these places? Because if you go to a broker, he will charge you a transaction charge, he will charge you the taxes, GST, etc. He will charge you all the STT, etc. He will charge you. But if you go to these dabba traders, they'll probably not charge you all this. The problem is these dabba traders may not give you the money or give you the shares, so they may not meet their end of the contract at some point in time, and you will have no recourse. So that is what is usually gets termed as cheating. There are online platforms given by registered brokers which are completely legal and in fact very convenient. So online platforms per se are not illegal. However, you have to be very careful to go through a registered broker only. Did I answer your question, Mr. George?
Yes, ma'am. Thank you.
Ms. Seema, let me ask you a question.
Yes, sir.
It's so surprising. Yes, because it is so surprising coincidence today. Today's newspaper, Malayalam newspaper, brought something very important thing about shares. It says the Sensex reached 60,000. And my question, when we just see the history that's given in the paper, whenever there was a skyrocket, it happens in Sensex, there will be either consolidation or correction.
Very true.
Is it expected? Is it expected now?
No, I cannot.
What can be the reason of this correction or consolidation?
So I will theoretically answer your question. So I definitely do not know when, in fact, one of the top brokers just yesterday put a comment on the Twitter, and I was amazed at the honesty and the truth of that statement. Very relevant to what you made. So he had said that I have been in the stock market space for 25 years. Every night, every morning when I'm getting up, I feel that today, the markets are going to kind of end their rally. And the markets have been proving me wrong for last 15 days. Okay, so nobody knows when the consolidation will happen. But theoretically, I'll tell you why it happens. Okay, there's a lot of what we call herd mentality that happens in markets as it happens everywhere else. So, like I mentioned, the stock exchange is a barometer of the economic development, right? So clearly, whenever you have seen the Sensex rally, the Nifty rally, you will see that the GDP numbers have turned out better, because in some sense, it is the growth in the companies that is getting reflected in these indices. However, what happens is that when a rally happens, investors, especially the retail investors, get the FOMO, fear of missing out, and they all want to participate in the rally. They will take off their money everywhere else. You will see the gold will fall, other asset classes, the rates will come down, and every money will go into the market. So there is a lot of artificial, for want of a better word, I'm using this word. So there's a lot of artificial demand that gets created, which is not backed by fundamentals, which is why at some point in time, the consolidation happens, because what is backed by the economic story remains. But what is, just because the buying and selling economics happens, the rally that happens because all of us are buying, because somebody called Rakesh Jhunjhunwala is buying, that will not sustain. So that is what leads to consolidation. And when it will happen is, I would be the richest person on the earth if I knew that. But yes, thank you for bringing that point. That's the point that we usually start talking with. Last few days, whoever's been talking about, we've been talking about Nifty becoming an adult because it has crossed 18,000, and Sensex
Yes.
becoming a senior citizen because it has crossed 60,000. But I said this forum I will not, and I was not feeling good about it. Thank you for bringing that up.
Thank you.
Ma'am, I know I asked 3 questions, but I just have 2 more, if that's okay.
Yeah.
Ma'am, like even I'm seeing these ads on TV about, I don't know if you've heard about stock market apps like Grow and Dr. FX. Like, but then I had a big doubt, like the difference between stock exchange and mutual funds. What is the main difference, or are they the same?
No, they're very different. So, how do I explain? So stock exchange is the platform where the trading takes place, right? So the buyers and the sellers will meet on the stock exchange platform. What is a mutual? So if you and I were to individually buy, you go to a broker, put a order, and then the trade takes place, right? But what is a mutual fund? Now, mutual, as the word itself says, it's a group of people, right? So a group of people. So like probably. Let's take a company which is very highly priced. Okay, Lakshmi Industries, for example, the rate of that company is in the range of 20,000. Okay, so you and I, okay, not you, I may not be able to buy the shares of Lakshmi Industries today because one share itself costs 20,000, right? But I feel that I'm just giving you a hypothetical example. Okay, but if I feel that it has a huge growth prospect and I want to make benefit out of it, I'm very hypothetical example. What we could do is you, me, about 7 or 8 people could come together and then buy the stock of Lakshmi Industries. So understand mutual fund like that. So mutual fund gets the money. So you subscribe to a mutual fund, which and each mutual fund, they have different NFOs, fund offers, which means that they will tell you that this fund will invest in the middle sector, in the small and medium companies. Another fund will operate only in the nifty companies. So they have these many fund offers, NFOs that they have, right? So people subscribe to these funds, and then collectively there are experts who understand the market, who decide to put the collective money, the money so collected, into these funds, and whatever the valuation increase in the valuation is there is distributed among all the mutual fund owners, right? So it is a collective investment in the stock markets, and the benefit is that some expert is taking care of your money for you. One, two, you will be able to access benefits of stocks which individually you may not be able to buy, may or may not be able to buy. So in that sense, it's very good. So they have something called SIP, which is the systematic investment plan, which means what they say is, keep investing whatever money, 1,000 rupees, 2,000, 10,000, depending upon whatever your goals are, and they will keep investing this money through the fund into the stocks. Okay, so at one point in time you're not paying too much of money, yet over a period of time you are buying into the stocks, and that's probably the best way to invest in a stock market. Your principal sir just mentioned about census having reached 60,000 and consolidation, which means suddenly the markets are going to probably fall one day, and if you are investing through a systematic investment plan, then that 1,000 rupees that you invest in that month will buy you more than what it would buy today, and that way you'll be able to ride the wave of the market. I know it's a little technical, but I try to kind of explain it as simply as possible.
And also regarding, you had said about the stock market falling, what are the factors that can lead to the stock market falling?
The stock market, the index falls, so the stocks fall, not the, so there's technically different. So what happens is there is an index that every exchange has, like NSE has Nifty, BSE has Sensex. So these indices are representatives of the market movement, of the entire market movement. So to give you an example, around 2,500 companies would be listed on NSE, but the Nifty comprises of about 50 stocks. These 50 stocks in a way represent what path the 2,500 companies are taking. So when you say the markets are going up, you mean that these 50 stocks are actually growing. So each of these 50 stocks has a weightage in Nifty, right? So some of them are heavyweights, some of them are lighter weights. So if the heavyweights move, then the indices move much faster. So and when they fall, then the indices, then that's when you say that the stock markets are going down. But at no point in time will you find all securities, unless of course exceptional scenarios, but otherwise in normal circumstances, there will be some stocks which will be going up, some stocks which will be going down. But because they're not a part of Nifty, it doesn't get, or Sensex, it doesn't get talked about in that sense.
Guest speaker Seema, Principal Johnson, teachers, and my dear students. Before I conclude, I would like to become a student of Seema. 1990, you were my student. Today, I am your student. Okay?
No, please, no.
Now, reading the economic survey of India, sometimes I have read about Mandi market, crony capitalism, and things, and common man's tally and all those things used in that book. But Mandi market, there are a lot of players in this field. Are you playing the role of a referee here when there is an exploitation going on? I don't know who does it. Is it the big groups or the middlemen or the farmers? I don't know. Maybe some are losers here. We can only, read from the paper. But because your job is vital, are you playing the role of a referee to stop this exploitation of these poor farmers?
Unfortunately, no, sir. I wish we were, but the thing is that We have absolutely no say in the physical markets, in the mandi market. So what we are running is the derivatives market, which is only deriving its value from what is traded in the mandi, and we get impacted by what is happening in the mandi space, clearly because we are a derivative market, right? But would we have an impact on the physical market? The answer is a big yes. So maybe when I have a one-on-one conversation with you, some of these points are very uncomfortable to make. Agriculture, what happens is everything about agriculture becomes very politicized, and hence becomes difficult to address at times. So our only role in the physical markets is creating awareness about the advantages that the derivative markets can bring to these people. And you'll be surprised that I hope we have a little time. I hope I'm not, I can keep going on talking about it. So in India, the agriculture is really fragmented. Okay, so what happens is one farmer doesn't produce enough to kind of trade on the platform of the exchange. There's a minimum quantity that you need to trade. So there are FPOs, these are farmer collectives, farmer producer organization, where about 100 farmers come together. And we play a huge role in kind of creating awareness, training these FPOs, because what happens because of the fragmentation is that there is a difference in the quality of the goods produced. Between one farm and the next farm, the producers of different qualities. When you trade on the exchange platform, there is a need to have standardization of the commodity, because only then will a price be able, we can determine the price, right? So there is a standardization that is maintained. So we do a lot of help even in the farming input process, but all that is not directly a part of the business that we are in, but peripheral to the business we are in. In fact, we started a company which went into warehousing, because that also is a very major challenge in India. You do not have good warehouses. The entire ecosystem of the commodity is very poor. So for a stock exchange to grow and survive, the entire ecosystem had to be built. So NCDEX has actually worked in the physical mandis, it has worked in the warehousing space, it has worked in the marketing space. So unless and until we do that, in fact, we talked about DMAT, in physicality cannot be totally removed from the agriculture space, but we have also started a repository company which gives you a e-receipt for anything that you put in a warehouse. So it is called ENWR, Electronic Negotiable Warehouse Receipt. It gives you the ability to pledge it and get money, and which is very important for the farmers, because otherwise, when they do not put it in proper godowns, sometimes the produce decomposes, it becomes spoiled, and there is no validation of this goods in the banks, and therefore they do not get money for it. So we're doing a lot of work in this entire space, and we've been doing it for the last 15 years, and still we are scratching the bottom of the proverbial pot. So it's a lot of work to be done, and the only thing that keeps us going is the potential that these markets have. Like I mentioned, because we are an agrarian economy, if you look world over, the commodity markets are at least, 10 times of the equity markets in size. That's not true of India. In fact, the potential that we have, we should probably be 30 times of the equity markets, because that's the kind of advantage India has. In fact, we are the topmost, we are the top country in terms of arable land. 52% is arable, sir, in India. And the next is US with 16%. So imagine the difference. And but it just not be, the farmer should be the richest person here. Unfortunately, it's the reverse. And I'll get started on this, so I'll stop here.
Okay, demand and supply are two sides of the same coin. In the month of December, we always find there is acute shortage of onion.
Very true.
And is it due to an artificial, hoarding? Is it due to hoarding?
It is not actually due to hoarding, because it's like you said, it is every year in the month of December. And while onion is not a commodity that is traded on the exchange, we do not have any commodity which doesn't have a good shelf life because of the lack of warehouses. But addressing your question, and this is something that my NEML, my subsidiary, deals with, they're into the physical mandis. So it's a season where, so onions that are harvested are stored, right? And the bumper crops, when you have bumper crops, you have a consistency in the supply. But of late, what has happened is that we've not had a bumper crop, and especially a couple of years back, the problem was that the warehouses were not good enough. So the onions that were stored in the warehouses got spoiled, and which is why by the time December comes, the supply tapers, and as supply tapers, the prices increase. And again, the fresh crops comes in mid-January, and that is when your prices start easing off. So that it's a simple demand and supply thing. Can it be addressed? Yes, it can be addressed. But are we doing anything about it? No, we are not doing anything about it, because there's some people who make lots of money because of this, and those people are not farmers.
Thank you very much, Seema.